And we're here to talk about reverse mortgages.
The same as a regular mortgage.
The bank is going to take my home when I die.
To 6 months to repay the mortgage.
I'm not going to leave anything to my kids.
Chances are the kids will still get something.
Hello, folks, and welcome to the Mortgage Den. It's Nick Silva from Northwood Mortgage, and with me today, Natalie Araujo, and we're here to talk about reverse mortgages. Welcome, Natalie.
Thank you for having me. Hi, Nick.
Now, our last time we did a podcast on reverse mortgages, we had some people write into us asking us questions that we really didn't cover. So we'd like to cover the myths of reverse mortgages today. And again, Natalie is our expert, and Natalie will be here to answer all your questions. So Natalie, question number one, you will lose ownership in your home if you take out a reverse mortgage.
That is false. In Canada, you will remain the legal owner of your home, even with a reverse mortgage. It is like the same as a regular mortgage. You stay on title and you don't lose your home.
And so what's the difference between your standard regular mortgage and a reverse mortgage?
So with a regular mortgage, you're basically taking out a loan where you're paying both principal and interest, or in some case just interest, and you're making those monthly payments. With a reverse mortgage, you're actually making no payments. So what's happening is the balance of the mortgage is growing and potentially the equity in your home is decreasing, but there's no mortgage payments to be made.
And you're remaining on title. Perfect.
And you're remaining on title.
Second myth.
Okay.
The bank is going to take my home when I die.
False. In Canada, if you pass away, you have up to 6 months to repay the mortgage. Just like it would be with a regular mortgage. And basically, your estate has time to, to pay back the mortgage. There's no place where, the bank is taking your home if you pass away. That's just not correct.
What if I move into a retirement home? Will the bank take my property away in that scenario?
No, they won't. So basically, you want to advise them that you are now in, personal care facility home, and you'll have up to 6 months to, either put the house for sale or pay back the mortgage. But again, they are not taking the home away from you.
Myth number 3, reverse mortgages are only good for people in financial trouble.
That's really outdated thinking. A lot of Canadians are now using reverse mortgages strategically and as a tool. For example, for retirees that are looking to delay their CPP and OAS withdrawal, retirees that are looking to, assist their adult children, or if they want to stay in the home and they don't want to leave and perhaps need to do some renovations so that it's more accessible to them. There's a variety of reasons why, Canadians are looking for a reverse mortgage option, and it's not just because they're in financial trouble.
All right, I'll throw myth 3B in at you.
Okay, go for it.
Do we have to take all of the money that's been approved on a reverse mortgage right up front, or can they have it in installments?
No, you can actually have it in installments. So there's 2 ways in which a reverse mortgage can work. You can get a lump sum, and at that point, you could just take whatever you need and then go back to them if you require more money. Or you can use it as a fixed income type product where they pay you monthly, just like a tax-free, monthly income.
Myth number 4, reverse mortgages have crazy high interest rates.
So it is true that reverse mortgages do have a higher interest rate. However, it's not crazy high, like maybe a private mortgage. I would say that it's probably on par with maybe like a HELOC. In 2025, we saw reverse mortgage rates in the 7 to 8 range. I think the trade-off is, you're not making a mortgage payment, and it's very comparable to a HELOC type product. And again, the benefit, not to sound repetitive, is you don't have to make a mortgage payment. Would
you say most people who apply for reverse mortgage do not normally qualify for your standard mortgage product at the banks?
I mean, sometimes, retirees will find themselves with fixed incomes that don't allow them to, qualify for a traditional mortgage. So sometimes, yes, that is the case. But again, to the prior myths that we were discussing, sometimes it's more about strategy.
Right.
Unlocking tax-free income that they can use for a variety of reasons.
Myth number 5, you can't get a reverse mortgage if you already have an existing mortgage.
That's not true. Actually, a lot of clients are using a reverse mortgage to pay out an existing traditional mortgage. Now, the one thing that a reverse mortgage will want is to be in first position. There can't be, let's say a HELOC or another type of mortgage in front of it. But no, you can definitely get a reverse mortgage just as long as you meet the requirements with age and with equity. Typically, you need around 50% or more equity in your home. And if there's an existing mortgage or other credit facility, we can pay that off.
Let's jump ahead to the next one then. You cannot get a second mortgage behind a reverse mortgage.
So generally that is not true. We do have some reverse mortgage companies that are very strict and do not allow a second mortgage or private mortgage. However, there are some companies that will allow it. Now, there are some drawbacks if you do get a private mortgage, especially in an environment where the real estate market is decreasing.
What's the drawback if the market's decreasing? Why would the second mortgage care?
Typically, like as we remember during COVID, when the real estate market was really booming, you would anticipate that the value would keep going up, even if the balance of the mortgages were going up. But now we're finding a reverse trend happening where the balance is still going up, but the values have gone down, in some cases 20 and 30%. The second mortgagee is now in trouble because the equity erosion may put him in an underwater situation. So a lot of those mortgages are being called.
So what you're trying to tell me is that there's a time limit on second mortgages with respect to going behind a reverse mortgage.
That is correct.
So Natalie, what you're saying is there's a time limit on the lifespan of a second mortgage when it's put behind a reverse mortgage.
Yeah, so I think what we really have to differentiate is if you are just getting a reverse mortgage, you can stay in the home as long as you need to and as long as you want, pending again that property taxes and maintenance are in good standing order. Should you take out a reverse mortgage and require additional funds because there's a shortfall or you require additional financing, you need to understand that you may run the risk of not being able to stay in the home as long as you want to, because if the market takes a downturn, then there's not enough equity in the property for the second mortgagee. And that could be a year, it could be 2 years. No one has a crystal ball, so it's really hard to say.
And say, hey, I'm at risk at this point in time, I want to be paid back.
Correct.
And that might not match with the lifespan of the reverse mortgage.
That's correct.
All right, myth number 7, Natalie. I'm not going to leave anything to my kids.
Well, the good news is you'll most likely be able to leave something to the kids. There was a study that was recently conducted by Chip Reverse Mortgage that indicates about 99% of their reverse mortgages have equity that was given back to the estate. So chances are the kids will still get something.
All right, Natalie, myth number 8. There's an age requirement to get a reverse mortgage.
There is an age requirement. The minimum age is 55 years old. Of course, if you are younger, the amount that will be given to you in terms of a mortgage will be less compared to if you're older. And some lenders also will give you more if you're male versus female, based on statistics of mortality. Yes, to answer your question, there is an age requirement. However, for clients that don't meet that age requirement, we do have a niche lender that will provide a very similar type reverse mortgage product, and all you need to be is 18 years old. So in those specific scenarios where clients are unable to make monthly payments, we do have options for them.
Natalie, one last question.
Sure.
When is a reverse mortgage might not be the best fit for one of your clients?
So typically if it's a short-term solution, a reverse mortgage may not be the best fit. And the reason being is it could trigger penalties that could be quite high. So if your main goal is equity preservation and estate preservation, you may want to look at some other options that are more, short term.
There you go, folks. We've covered all the myths regarding reverse mortgages. I'd like to thank my guest here, Natalie Araujo, for coming today and helping us out with all these lovely myths. Thank you, Natalie.
Thank you for having me, Nick. It was a pleasure.
And for my audience, look forward to the next podcast where we'll be discussing much more topics regarding mortgages. Thank you.